Well, hello, and this is another Switzer update. And the big story today involved a former lead partner at Deloitte with the name Ambijit Endau. Now, this is an allegation at this point in time. The man's gone missing, so has about $60 million worth of investors' money. I do laugh at his surname, Endau. The word endow means give or bequeath an income or property to a person or an institution, but looks like this guy's actually taken money at this point in time. And Deloitte's pretty well embarrassed about the whole thing. They say they didn't endorse anything that he did, and he did it basically without their knowledge. Though some people in the firm apparently were investors in his unusual investing idea. He apparently was talking about a return of about 40% in 6 months, and he was investing apparently in Indian government bonds. And I think investors who, in addition to Deloitte partners, which includes senior executives, also the people who got involved were from leading companies and IT firms across Australia. Now, this was very much like, I think, a Madoff-like scheme, making unbelievably big promises about returns. There were actually preferential payments to people who got in first, apparently, and they got their capital back, but others who joined later were really, have really been punished by this guy's unusual behaviour at this point in time. I guess nothing's been proved, but there's been a special firm appointed for tracing where money's gone. And at the moment, Mr. Endau is missing in action. Now, one investor said that he was a very believable peddler of this product because of his background in the accounting fraternity. What's really interesting is that I think the key story is that if even accountants have been caught out by this guy, that whenever the promises are big 40% returns, 20% returns, even 15% returns, they are actually saying to you, you're looking for big returns, but you're taking big risks. Remember, term deposits are now ranging from 4.1 to 4.5%. They're very safe investments. And as you start going up the risk curve, you really are taking on more and more risk, and you've got to be aware of that. And this seems totally surprising that some really smart people look like they've been caught out. Now, in terms of Wall Street overnight, the inflation figure came out. It rose 0.5% in January. They're looking for a 0.4% rise. The annual rate's gone down to 6.4%. They were hoping for a 6.2% number. So it was slightly higher than was expected. But I'll put on screen a chart that actually shows you what's happened to US inflation. So in June of last year, it was 9.1%, and it's now got down to 6.4%. You can see the way those bars are falling. Inflation is falling in the US. Maybe not as fast as people expect, but what I actually do is I look at the last reading and it rose by 0.5%. Now, if you annualize that, that's 6%. And so in many ways, it is still coming down, and I think it's going to come down at a faster rate as we go through the rest of this year, and that's really going to be good for the outlook for inflation. Can we just go back for a moment and have a look at those numbers for the Dow Jones? Down 156. But what's interesting is the Nasdaq was up, and you know the Nasdaq is very interest rate sensitive, and a higher than expected inflation number really should have made people spooked about rising interest rates. Instead, they're not. So it kind of was an okay number. It would have been better if it was a lower than expected number. The market would have really shot up. Both the Dow, the S&P 500 and the Nasdaq would all be up. But considering it's not a bad result, but the bottom line now is our eyes will be on US economic data over the next few months to see if there's good reason to believe inflation is coming down. And so I can't see stocks zooming up at this point in time. But as long as the data remains like this, not too bad, we probably won't see a big sell-off. Of course, the bottom line is if we get some really scary inflation numbers, the stock market will sell off. That's the observation for today. Thanks for joining me. Talk to you tomorrow.